New year, new market. We hit a new record low of available inventory this week. The big question is, where does it stop? Does 2022 resume a more normal curve, or are we stuck in the twilight zone of the 2021 housing market? So that's what we're going to explore this week in the Altos Research Market Update. I'm Mike Simonsen, and this is this week's market report. This is the first one of 2022. Each week, Altos tracks every home for sale in the country. All the pricing, we analyze all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. By the way, stick around to the end of this video today. We have a very special announcement from Altos. Cool new stuff happening. So, okay, it's Monday, January 3rd, 2022, and here's what the market is telling us right now as we set up for the new buying season. So there are just over 293,000 single-family homes unsold on the market this week in the U.S. That's a new record low, falling below the previous record, which we set April 30th of last year. The big question is, where does it go next? Normally, inventory hits its low point just after the new year. So it's the holidays, much of the country is covered in snow, you have holiday travel, and then school kicks back in. So normally the second week of January is the low, sometimes as late as maybe the beginning of February before we hit the lowest point of available inventory for the year. You could see each year the curve here bounces along the bottom before climbing really in March. Last year, though, inventory kept plummeting week over week until we finally started turning up that first week of May. American homebuyers were just in overdrive last year. Part of our new record low supply is actually to be expected. Every year, Americans turn more and more single-family homes into investment properties. That means fewer of them are available for resale. So you can see that each January 1st, we have less and less available inventory. Just 6 years ago, we had 1 million homes unsold on the market at the start of the year. Last year, we started the year with 420,000, and this year we are under 300,000. So the number to watch here over the next few weeks is whether inventory keeps falling substantially each week like it did last year, or whether this year is more of a return to the normal pattern. So this is unprecedented territory, and we really don't have any signal or a guess yet as to where the inventory curve is going to be in the next few months. It's really a question of demand too, because there's no surge of supply. There's no mechanism for supply to come rolling onto the market. There's no possible wave of new listings coming unless, some like dramatic shock hits the economy, which would by definition be unseen at this point. So our record low inventory is really an expression of Americans gobbling up every home that they can. We can also see this demand unabated in our immediate sales tracker. So over the holidays, 25% or more of the new listings are taking offers and going into contract within just a couple of days of hitting the market. So the vertical bar here is each week of the new listings coming to market. The light colored chunks are those being sold essentially immediately each week. We have our holiday week in total dip in volume. And this coming week will be relatively low again. We have another week of holiday impact. Then we'll start to see total volume climb. The key observation here is that there really have been zero signs of demand abating. We're still buying as fast as we can, and inventory can't build because we're buying it all. Here's another way to look at demand. This is the price reductions chart. You can see that January each year is right in the middle of this decline in the annual cycle. So in January, we have relatively fewer price reductions because the holidays, some properties are withdrawn rather than taking price reductions. And we start to get new listings for the spring season. So as a percentage, there are fewer that have taken price reductions in January. And then more new listings come to market, and they don't have to take price cuts until later, like if they haven't sold in the second quarter. So our median days on market right now is 55, 60 days. If you list in January, you don't start getting nervous about your price until March. So that's why price reductions will keep falling for a few more months. The price reductions reading right now shows us continued super high demand, with only 24.5% of the homes on the market right now having taken a price cut recently, last 90 days. This is maybe not quite as frenzied as last year when we were at 23%, but you can see that it's lower than any of the previous years. So it just shows us how much leverage sellers have right now in this market. If you have a hypothesis that the market's going to cool in 2022, you should keep an eye on price reductions to verify if your hypothesis is emerging. So far, no signs of cooling whatsoever. And that brings us to pricing. We finished 2021 with the median single-family home price of $365,000. That's a nice, roughly 10% gain for the year 2021. One of the things that this chart shows us is that the real peak of the recent frenzy, the counter-seasonal trend, people buying in the off-season, was Q4 2020 through Q2 2021. The winter months of last year had this powerful pandemic trends going on and the lowest of the low interest rates. So normally prices fall in December, and in 2020, they barely budged down. So the December prices adjusted a little more normally this year. You can see we have a little more dip right at the end of the year here, the dark red line. I'm talking about the dark red line here. The pattern is up in the first half of the year, down in the second half of the year. Last year, the down part was very slight. So this year we've had a more normal pattern. This is encouraging. Demand remains high, but maybe there is some price sensitivity for affordability that buyers are communicating there that has helped us adjust down a little bit in December. By the way, the real data to watch here in the next few weeks is the light colored line. So we always hit the low price of the newly listed cohort this week at $319,000. This is really the lowest point of the year. By January 17, the 2 Mondays from now, we'll see a big jump in the new listings price. And it's the steepness of that jump that will help us forecast home price gains for the whole year. So you can see how the light red line here spiked higher faster than previous years. And that was sellers looking around, seeing their neighbors' homes go instantly, seeing huge crowds at the open houses, and they know that they should price their new listing a little bit higher. So each week that signal continues, the higher the new listings prices go. Because of where the New Year's holiday landed this year, we will probably actually have a second week of this bottom here before the big jump starts January 17th. But it already looks bullish for price gains for 2022. We'll get clarity on whether, for example, buyers are hitting a limit on affordability as prices rise, or whether they feel like the inflationary economy means that prices are actually more affordable in the long run. Remember that in a 6% inflation world, a 3% fixed mortgage is a really good deal to protect your wealth. So if inflation goes higher than that, it's an even better deal. So we're going to see how sensitive to buyers are to rates and inflation in the coming months. Okay, that's all the data we have time for today. We spend so much time here at Altos reading the data, me talking to the camera about the data, but there is a lot more to the real estate market than just that. There are perspectives and trends and strategies. So to that end, we have launched a podcast. It's called Top of Mind, and it's where I get to interview really interesting leaders, thinkers, doers in real estate. We've already recorded a bunch of episodes, and we will be releasing those, once a week or so. You can find the podcast video on our YouTube channel. There's a Top of Mind section, or any of the normal podcast apps too, anywhere you find your podcasts. Especially if you are a professional in this industry, you should make it a point to listen to that. Our first guest is Mark Johnson. He's the CEO of a fast-growing real estate brokerage, JPAR Real Estate. They're based in Texas, but around the country. I love this conversation because I get to ask about, what are the techniques of the really successful people in this market right now, agents, but also buyers and sellers. What are they doing right now? I learned so much on this one. It's our very first one. So many more to go. We have economists and CEOs and brokers. We have prop tech companies, all kinds of really interesting perspectives on what's happening in this market right now. So much to learn and explore. So we'll include a link to the podcast in the description below. You can always get your Altos links there as well. Of course, please check out the new podcast, Top of Mind. Okay, everyone, more next week. Happy New Year.